Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Happy Easter to everybody. So today again we'll take a look at the euro currency, but to be honest, on the current weekend, our fundamental part of the research is a bit more interesting than the technical one, because on the technical part of the research, as you can see on the daily chart, nothing has changed since Friday, and it's really just few things that we could bring really new to technical analysis that we have right now on the euro currency. That's why mostly the technical picture stands the same as it was in the last week, in the previous week. Our major background here, guys, and a major reason why we think that the euro currency is bearish right now is based not on the recent drop that we see, but on an ability of the market to complete bullish patterns that has been formed. This is more strong. So this collapse that we see on the euro currency that has started right from this top in March is the consequence of the inability of the market to complete bullish patterns. That is just a result, but the real reasons stands right here. So here where we have recognized the failure of the market. So recall that our changing of the opinion has happened right here when the market has shown too deep retracement when it was unable to continue upward direction, and when it has turned to irrational retracement. That the behavior that is not normal for the bullish market that we see right here. That was the culmination of the trend shifting. Here is a consequence of this. That's why where we think when we have the bearish view on the euro currency, not just because we see the collapse and think that should continue, but our reasons is more fundamental, and it's based on the previous patterns that has failed. So that's why we continue to think that market should continue action to the downside. And first, what euro currency should do is to take it out of these lows. This will be the erasing of so-called right shoulder of our hand shoulders pattern. So when the hand shoulders failed, market first should drop below the right shoulder. On the way down, we think that market could find some support around monthly pivot support ones, 1 or 460 area approximately. That's what we're expecting to see. Meantime, euro currency stands at the support area, and we said last week that probably minor retracement could happen, but to keep this overall short-term bearish setup, the retracement should not be too significant, because here it's not quite logical. This market right now stands on the way down. It has broken through the confidence support that was around the weekly monthly pivot point, and this breakout has happened without any respect, even minor retracement. So that's why the deep retracement around the trend lines will be not quite logical here. That's why our major point to watch for on the common week will be the same as the last week. So we're watching for a breakout of this trend line. As soon as it will happen, it will mean that market stands on the road to the 1 or 460, and it should take out of these lows. This level is important, but I think that it has the minor value because, as we said previously, as confidence support wasn't able to hold market from this drop, the single level could stop for some time the dropping here on the euro currency, but hardly it will be really crucial support. Hardly it will lead to drastic reversal here to the upside. I think that will be just a temporal pause around this level, nothing more. So that's what we see right now on the daily chart. On the intraday charts, guys, on the forward time frame chart, picture stands mostly the same. As you can see, upward action has been stopped by the confidence resistance. Actually, the market has completed maximum retracement that we could accept actually we have hoped that market will stop around the weekly pivot point, and this was the nearest fib level. But if upward action will continue, as we said, it definitely should not move above the weekly pivot resistance one, and it should not break this consolidation in opposite direction. That has happened. So this action on last week has been stopped by the weekly pivot resistance one. When the pivot resistance one holds upward action, it means that the previous trend down is still valid. That's very important moment in our analysis. So right now, as you can see, market has the free space here between current level and this top, and it could relatively free fluctuate inside of it. So this will not impact on overall picture on the pattern that we have here. So that's free space where market could feels free to move inside. And downward action could take the shape of the butterfly. So if it will happen, in this case, market could complete the targets that we have on the daily chart using this potential pattern. It doesn't mean that it definitely will be, the appearing of the butterfly. This is just one of the scenarios that is possible that could lead market lower. On the hourly chart, guys, we continue to watch for the same wide wage pattern and watching for this breakout of this line, because breakout of this line simultaneously will lead to breakout of that trend. So that's obvious. This will be very important sign. As soon as this will happen, it means that on a minor retracement, you could think about taking short, and market should continue move lower. As you can see, technical picture hasn't changed real significantly. That's why it's probably fundamental part of the weekly research will be a bit more interesting to you, because the technical just confirms what we have previously.